decirte. Okay, good morning, everyone. I think we'll get started. So welcome to this breakout session. I'm Heike Reichelt from the World Bank Treasury, and I'm in the Capital Markets Department. So the department that issues World Bank bonds. We raise about $30 to $40 billion through hundreds of transactions every year in many different currencies, 20-something currencies, and we sell the bonds to investors around the world. And my team is responsible for the investor relations of the World Bank. So our primary audience is investors, the investor community, which of course is very diverse, as we know and heard in the previous session. But we also manage the relationships with others that investors look to for information, including credit rating agencies and the financial media. And we work very closely with our colleagues in the funding teams that also communicate directly and indirectly with investors. So the title of the session today is Transparency and Stakeholder Relationship Management. And investors are one of the stakeholder groups that we'll be speaking about, but of course debt management offices have other stakeholders or relevant audiences. Internal ones like the finance minister or your colleagues, but also other government agencies or legislative bodies. External stakeholders like investors, other sources of fundings like the IFIs, also credit rating agencies and financial media, and others like auditors, internal and external auditors, and of course also the general public. They all have information needs and expectations. And people sometimes say that managing stakeholder relations is expensive, and we heard Ambroise from France also says that it's very time-consuming to engage with investors. But as we'll hear today, it's even more expensive if you don't do it, or if you don't do it in a way that's appropriate for your particular situation. So if you don't provide clear information that investors, whether they're domestic investors, international investors, institutional, retail, if you don't provide clear information for them, then you'll have to pay more for them to buy your bonds. If rating agencies don't have the information that they need to correctly assess your credit or your value, then you might end up with a weaker credit rating, which of course increases your cost of funding as well. And thinking of internal stakeholders, if your reporting and your communication doesn't answer the information needs that, for example, your finance minister has, he or she will keep asking you until they have the answers, and those ad hoc requests are time-intensive as well. So one thing I want to mention is there's no one-size-fits-all solution for stakeholder engagement. There's going to be benchmarks and best practices, but based on your own situation, it's going to be different. For example, some debt management offices have a separate investor relation or stakeholder relation function, and others don't. Maybe just by show of hands, can you tell me like how many of you have separate colleagues or teams that do this stakeholder relationship management? Can you? Okay, thanks. Quite a few of you. All right, so I have a very distinguished panel here, and I am going to mention that it is the only panel in the whole conference that is balanced in terms of gender. So I'd like to start with two representatives that we have from debt management offices. All the way to the left, it's Antonio Juanbalz from Uruguay. He has been senior advisor in the Ministry of Economy and Finance since 2007, and he's also a professor at several prestigious universities. And to my immediate left is András Reis from Hungary. Did I get that right? No, yeah? Okay. He has been at AKK since 1995, and since 2001 he heads the middle office. And his responsibilities include preparing the debt management strategy and setting up benchmarks. And he's very active in international relations and communications of AKK as well. So Antonio and András will each give their own perspective on transparency and stakeholder relationship management. Then we have Lisa Schneller from Standard & Poor's. She will talk about what information a credit rating agency needs from borrowers for the credit assessment, which I think is very important for everyone to hear. Lisa is Managing Director in the Sovereign Ratings team and covers key credits in the Americas, such as Brazil, Mexico, and the United States. She also covers multilateral development banks, such as IADB. And her career also includes several years teaching economics to university students, and she's a frequent guest lecturer. And she also spent some time at the Fed as an economist. And last but not least, to my immediate right, I'm pleased that Elizabeth Curry is also speaking today. Many of you know her. She's going to summarize the findings of a World Bank paper on the topic of transparency and stakeholder relationship management. Elizabeth is lead financial officer in the Financial Advisory and Banking Department in the World Bank Treasury, and she has more than 20 years of experience managing both sides of the government balance sheet. Before she came to the World Bank, she was in Colombia's Central Bank and Ministry of Finance. And I calculated that among us, we have more than 1 century worth of experience in the relevant fields that we'll be talking about. One thing I want to mention is people have slides that they will go through. You'll get them on a stick later. But I do want to have time for questions at the end, so they're going to do their presentations relatively quickly. And I also want to ask you to share your experiences. And I've already spoken to some of you that I'm just going to call on, but I would like if others just volunteer, just to share, how you do things and how you think about it. So I think we'll get started. And Antonio, I'm going to give the clicker to you so that we can kick off. Thanks.
Thank you very much, Heike, and thank you very much for the World Bank. This is a very nice moment to share with you how in Uruguay could improve the relationship with not only with investors but also with the citizens in general in Uruguay and media and the Congress. Basically, I divided into 4 items these presentations. Just to give a global picture of our economy, which is a very small economy, or the profile in the central government. Then how have been evolving the communication strategy since 2007. In our case, the debt management unit was created in 2006, so we are very young in this business. I started to work in 2007, and one of the main issue that when we started working at the office, before that the debt management was under the central bank function, but then we moved to under the treasury, and one of the things that we evaluated at this time that is that the need to improve the communication with the market to show our credit history and to show our potential for the future. And then some concluding remarks. In terms of the profile and first of all our economy, we are only 3.3 million people in South America. Our size economy is around 56 billion, which means a GDP per capita of around almost $70,000 in US current dollars. We have been growing a lot after the big crisis we have in 2001 and 2002. After that, we registered an important recovery in our economy, and one of the characteristics of Uruguay, which is something different from the other Latin American countries, that population doesn't grow. So we have a problem in some sense, but at the same time, all this growth, all this real growth, which was 5.6%, translate in a very similar real GDP per capita growth. So we could achieve a very significant growth in terms of income on the population after the big crisis we have, and that was one of the reasons that in 2012, in April of 2012, Standard & Poor's first gave us the investment grade, and then the other 2 main rating agency raised up our rating. In terms of the consolidated public debt in Uruguay. As you can see, in the last decade, we have a problem, more than 100% of debt over GDP. But then, due to the impressive growth we registered and due to the fiscal policy, which was very conservative, we could bring down this ratio. This is the consolidated public debt. This includes central government, but also include the central bank and some local government debt. And in terms of net debt, the last ratio was 22%, which it's been a significant decrease, and it is on line of what we set in the budget, in the FAT budget, which went from 2010 and to 2014. The main goal was to achieve a net debt by the end of this year of 23%, and we could achieve this goal. In terms of moving to the central government debt, the structure is we have, if you see by jurisdiction, we have the external debt is very important. External investors are very important for us. We usually go to the market at least once in a year. We started issuing US dollar, but then we could also go to the global market issuing in CPI-linked bonds. And in the last, I would say, 4 or 5 years, we started to do more liability management exercise in order to continue improving our debt profile. In terms of local and foreign currency, we have almost half in each currency. We started a process of de-dollarization, as in the previous session, Carlos Linares mentioned that in the case of Peru, they started to de-dollarize their debt. We were in the same way. And the second goal that was explicit in the budget is to achieve a 45% local currency share by the end of this year, and we also could achieve this goal. In terms of the profile, and after, as a consequence of the crisis of 2001, we learned the lesson, and we worked very hard in order to smooth the profile for the next year. Right now, the average time to maturity of the central government debt is more than 15 years. And when we started in 2007, it was 11 years. So, due to the liability management exercise we have been done, we could extend the debt profile, and at the same time, the amortization for the next year are very pretty slow in terms of GDP, around 2.1% of GDP. We working on to build some buffers. From one side, we have the contingent lines with all these multilaterals that represent 3.5% of GDP. But on top of that, we have enough cash to cover at least the next 12 months of amortization and interest payments. So this is a rule that it was implicit at the beginning of 2007, 2008, but then we explicit to the Congress and put in the budget from 2010 and 2014 that the government must have enough cash to cover the next 12-month amortization and interest payments. And sometimes the citizens or some politicians say, well, it's very expensive for us because of the carry trade cost of doing this of maintaining this policy. But I think, especially during the crisis of 2008, we were out of the market practically 1 year, and we think that not only the citizens but also the analysts and the rating agency, they learned that this policy was very pretty good and very smart policy in order to face the turbulence. In terms of our structure and legal framework, we separate the investor relation office from the other part of our office. The back office continue under the central bank responsibility, but in the debt management unit we divide it into these three components of the office, and we are only six people in the debt management unit. So even though the three senior advisors have specialized, of course, in some time during the if you are in the market, or we have to complement and to work together in the same area. So this is one disadvantage we have to deal with that, but this is the reality. In terms of the legal framework, basically in 2010 we sent to the Congress what we call a responsibility fiscal law. It's basically this law establishes a cap for the annual increase in net public debt of around 1.2% of GDP. This is in some sense this is the other side of the coin of the fiscal result. So we are not allowed as a central government to issue if in the previous year, in the previous fiscal year, the total net public debt increased in more than 1.2% of GDP. But there are some extraordinary situations. I remember in 2008 we registered a very significant drought in the economy, and basically all the energy in Uruguay or more than 60% of the energy is generated using hydro sources. So at this time we have to import oil when the price of the barrel was around $100. So the company couldn't transfer to the bill to the consumer all the increase in the cost of generation of electricity, and the government have to support this gap. So in this case we are allowed to exceed the cap up to 100%. In terms of reporting, what we have to do is to once the administration take office, they have to send to the Congress the macro plan for the next 5 years, and then in which we as the debt management office has to negotiate with the macro office and other authorities the plan, and then we update this budget on an annual basis. We have to send every year to the Congress what we call the Ley de Rendición de Cuentas. Is some update of the original plan. Is something must to be changed. We inform or we propose to the Congress. So in 2010, the main guidelines were this. We worked to reduce the rollover risk, to deepen the pre-funding policy. As I mentioned, we have enough cash to cover the next 12 months, at least the next 12 months. In terms of explicit goals or number, we put only 2 numbers in the budget. One was to achieve 45% of share of local currency in the central government portfolio by the end of 2014, as I mentioned, and the other was to achieve a net public debt of 24 or 33% of GDP at the end of 2014, as also I mentioned. The other guideline was more not quantitative but qualitative, is to reduce the interest rate risk, to achieve an optimal share between multilateral and private debt, and to diversify the funding source and achieve a more dynamic market, a more dynamic domestic market. In terms of our communication strategy, basically the strategy was based in 4 pillars: transparency, availability, predictability, and equal treatment. Transparency because we always produce the same reports to not only to the Congress but to investors. Sometimes, of course, we highlight some of the most convenient part of the history, but basically we always inform the same on a quarterly basis, and then I will explain which report we are producing. The availability is key for us. We always be in contact with investors, with the media in Uruguay, with the international media, with everybody can send an email, and we try to answer the question in at least in the next 24 hours. Sometimes we are not the appropriate office to answer, but we try to put in contact with other offices of the ministry. For example, if an investor asks something related with PPP, we are not expert on PPP, but we put in contact with the PPP office at the ministry, and they can answer the request. And in terms of predictability, we report basically on a quarterly basis for the market and for the media, and also we present a calendar for the next 6 months in terms of local elections. It's very important for us to maintenance the investor relations. We think we are, as I mentioned, we are a small economy. It generates very positive externally for our economy. In 2011, we launched the website in the management office, and basically what we've done is to follow and take into account the data transparency practice that the IAF suggested. We put in contact with these people at this moment, and we designed all the website taking into account the ranking that they suggest to the market. It is very easy for investor to go to this website and to find all the information related with the central government debt in a very friendly format. This is the result of website visitor in November. I remember that when we analyzed what's happening in the first month, almost 100% of the visitors were in Uruguay, but right now we see that investors from abroad are visiting our website, and this is a objective that we want to develop. In terms of reports, we produced, as I mentioned, 2 reports. For the first one, we launched it in October of 2007. It's a small report that talks about the recent macro and fiscal development in Uruguay. Then at the end of this report, the investor can find a very handy and summarized statistics. We know that some investor that hasn't enough time to cover Uruguay probably go straight to the statistic and not to read all what happened. Only 4 or 5 pages. And the other report is the report we started to produce in October of 2009, and this report has only 2 pages. 1 page is refers to the recent action in the market, or the plan. The second one has some risk indicators and the use and source of funds of the central government for the next year. So all the media in Uruguay expect that this report, because they go straight to the use and source funds, and they produce some articles if they see some change with respect to the previous report. In terms of investor meetings, we always have an institutional presentation. We update this, and if it is necessary, depending on which is the counterpart, we invite some colleagues from the budget and macros office in order to be present in the presentation and to give more information and more feedback with some specific items, could be, for example, the fiscal policy or what happened with the budget and so on. We always do a non-deal roadshow on an annual basis in the U.S., in the East and West Coast. We try to go to Japan and to Asia every 2 years. In 2007, we launched a samurai bond. In 2011, we launched the second samurai bond. So we try to be present here in Japan. It is important for us in order to broaden our investor base. And after we obtained the investment grade or recovered the investment grade status in 2012, we knew that some Latin American countries, for example, Pacific countries, Chile, Peru, and Colombia, could be interested in investing our papers. So we decided to visit them, to make some no-deal roadshow, just to show the history. There was some demand for information, and probably we will continue visiting them, this new potential investor in the next years.
Can I just ask a question? So you mentioned that you have 6 people in the unit.
Yeah.
When you do these non-deal roadshow, who goes?
For example, in the case of Japan, in the first non-deal roadshow, we went with the minister, not only with the people of the debt management office, but we invited the minister. And generally, it's got the director of the office with myself and some other colleagues. Basically, we are 3. So half of the staff is in the non-deal roadshow, basically. Another important key for the local market is we started to, even though we meet with the local investors, who basically are the pension fund and some insurance company, the big accounts. This year we decided to invite them to participate in a survey, which were treated confidentially. Basically, we wanted to know if they were okay with the quality of information that we were producing, and we get some feedback from them. And then the other part of the survey was related with the potential demand of security, which securities they will be able to invest in the short term. It was a very productive for us. We could summarize and have a global picture of what the local market is demanding from us. And also, sorry, this is the survey. And also we keep an eye on the investor base. We are of course we are continue monitoring which are the main clients of our bonds. Because when we go to the roadshow, to the non-deal roadshow, we have to choose which are the buyers, and if some client that they didn't continue buying, we try to convince them and to ask them what is the reason, and try to invite again to invest in our bonds. In terms where the relationship with the rating agency is very important for us. Every time we close a liability management operation or an international issuance in the global market, we make a call with the analyst and try to explain the rationale of this exercise. Of course, we receive on an annual basis when the analysts come to Uruguay. And there are other actions that we have been done. For example, this year there was a invitation from Navios Maritime they invited the Minister of Finance to close the bell in the New York Stock Exchange. So we take advantage of that and could concrete some media interview and some other actions for promoting the country. And this year we could organize the first investor online conference. We talked with people of the IIF and suggested in this first time, why don't you invite the minister? And the minister was okay, and he provided a global picture of the macro of the recent macro evolution of euro in the next 15 minutes, and then in the other 15 minutes we receive question and comment from the participants, and all of the question, which I remember, I think there were 9 or 10 questions the participant made with transfer to the minister, and the minister could answer the question. So it was we consider it was a very important signal to the market that everyone has an answer from the minister. I remember that they participated. The participation was 100 investors. Half in the region and half in USA and Europe and Japan. The regular calendar we always provide to the market with horizon of the next 6 months. This is something that is very important for the local for our local investor. And is something that they explain in the survey that they wanted to have a calendar for the next 6 months, and so we as a consequence of this feedback we started to do it. And as a conclusion, we could achieve the 100% of in terms of the communication. The investor relation and data and transparency suggested by the IAF this year. It was a very good benchmark for us when we started in 2007, just to how can could we improve the relationship with the market and also with the media. So just to wrap up. Despite we have a small staff in our office, we consider the investor relation area a key factor for us. Retention for staff is crucial. Sometimes, you need time for build a relationship with the market and with the Congress and with the analysts in general, also with the rating agency, so they know that they pick the phone, they call us, or they send an email, and we try to respond in the next day, or in the next week, and the other thing is that the quality of communication always can be improved. We consider that. Always, every office can do new actions in order to show the history. We use, or we try to use all the available tools. We try to learn of what other offices are doing for incorporating in our communication strategy. And basically, this is our history.
Thank you very much. I saw that on this slide here, where you showed the ranking by IAF, that also Brazil got a high score and Turkey got a high score. And I know that there's people here from those 2 countries. So maybe after Andras speaks, you can just share a little bit about your sort of stakeholder relationship management. Is that okay? Yeah? Okay. All right. So we'll pass on to Andras. Can you give him the clicker?
Sorry.
Thank you very much. I would like to thank the World Bank that I'm here and get the opportunity to provide our experiences in investor relation. Hungary is a small open economy in Central Eastern Europe. It has 9.9 million inhabitants. its per capita GDP is about a bit more than Uruguay's, 17,600 in PPP. Hungary was one of the countries which was hit very hard during the crisis of 2008 and 9, and that was because of our fiscal sins before, because in the early years of 2000, Hungary increased its public debt ratio, and also the population was very keen to amass debt, and that meant that we had several indicators which were rather unfavorable before the crisis. For example, the current account deficit we had. So after the crisis, there was a big turnaround, and that meant that both the fiscal policy improved, and the general equilibrium in the economy. And now we are again on a good track. We have a robust growth in Hungary, and also at the same time we were able to maintain a current account surplus. What is not so favorable, that is how the public debt developed in the last decade in Hungary. And that's why the government is very keen to reduce gradually the public debt, and that started already in 2011. And not only the debt ratio decline is a central objective of the government, but also the improvement of the currency structure. That means that we want to increase the share of domestic debt. This share, which reached its 50% ratio, I mean that the foreign currency debt reached 50% around 2011, basically was part due to the fact that we turned to the IMF and the European Union, which provided loans in foreign currencies, and also the depreciation of the Hungarian currency. But after that, we were able to again move to that level which was before the crisis. I mean that we would be much glad if our debt ratio, foreign currency debt ratio, would fall to below 30%. It is also very important that high debt normally means that the country has to deal with it. So partly that is the reason why our public debt management is relatively developed, because we have to deal with it. So that's one of the reasons that we have a relatively large liquid market. That means that, however, our country is not too large, but in the region in Central Eastern Europe that has the second largest size after Poland, and that means that for investors, wholesale investors, for foreign and domestic investors, that was for a long time a natural choice to invest in, and that was important advantages versus other countries, that investors were originally interested in investing our securities. But of course that's not for nothing, so AKK had to work very hard during the last 16 years, or almost 20 years. Already we had some problem in the early 1990s, and that was why that government decided to establish AKK originally as a budgetary institution, but later on it was transformed into a limited liability company. So that's one of the few examples when debt management is done by a dedicated company in a country, and that means that we have, for that reason, we have a very professional relation with our not only investors but also primary dealers. And I believe that that was very important, that because of the permanently relatively high debt, public debt, what Hungary had, that the necessary resources was dedicated for establishing a debt agency, and also because that debt agency is responsible for debt management, it is very important that they really interested in managing public debt, and first of all to have a very good relation with investors and establish a primary dealership system quite at the same year when AKK was established. Of course, we not only have to have relation with our investors and market participants, but there are quite large scope of stakeholders which are in some way interested about Hungarian public debt. And that means that if you have a look at that list, that means that those stakeholders have quite different interest in the evolution or the origin of our public debt, and that means that we have to use quite different approaches to provide those information needs what these institutions or private individuals can ask. That's partly the reason why we do not have a dedicated IR office. First of all, because we established those functions before we learned or this idea came about, and also because those part of AKK is responsible for meeting the information needs of particular stakeholders which really have the information needed or they ask for. So first of all, there are very important part of our communication are done by, of course, the senior management, mainly the CEO and deputy CEOs. We have a direct contact done by the deputy CEO of the front office, so that's him personally, who is a well-known person among investors and banks. Mr. László Búzás. Also, other part of information needs are provided by the middle office. I'm the head of the middle office. Of course, all information which are related, very detailed and professional data, which may be the interest of several stakeholders, that's my department who provide them. And not last, these are those information which are provided to the Minister of Finance or Minister for National Economy and for the government and for the controlling offices. And ultimately, we also have a marketing communication department in this organization graph, and that is particularly was established when our retail program was established by the government, so that they also have a different interest, and that is about our retail program. So as I already mentioned, we always have a relatively high public debt, and that means that we had to start very early the development of the government securities market. And that was because one of the very first steps in establishing the market for Hungary was started with with providing gradually a complete independence of our national bank. And the very first step was that it was prohibited that the central bank finance the government, and that meant at the very first year in 1991 and 92 that we have to start build up our government securities market. In 1995, there was a crisis in Hungary, and that meant that the government had to completely renew its debt management operation. One part of this crisis was that basically there was no staff available at the Ministry of Finance, so basically they provided poor salaries at that period of time. And that meant that basically there was no staff, so there was no people, for example, who could meet with investors or other stakeholders. And that was that year when AKK was established. And of course, we could only build up our market if we provide the necessary information to our investors. In those years, it was also very interesting that some big players in the market were monopolizing information. So they were trading on the market, and they have the necessary information about the actual state of the market, but they were really reluctant to provide that. So the very first idea of AKK was first to make those information at all, which are important for other investors to enter to our market. And that was the very first that we created benchmark yields and government indexes in our market. And after that, we started to put that made it available. Later on, that was our website, which was the main forum of that information source, but also we put that information on Reuters, Bloomberg, and other media. It is also very important that we established in '96 our primary dealer system, which is our main channel to our investors. So basically, we have to have a very good relation with our primary dealers, and those are the primary dealers who will contact with investors in the domestic market, and by that way we could provide also those information which is important. We are also try to be as open as possible, so that means that while it is not always normal that the government operates in an open way, but actually we were very keen to provide as much information as possible, and also we were very keen to develop our home web page to investors, and whenever we provided any information need, they were very first tried to calculate whether we could add that to our web page or not. In case of retail debt, that was also a very important part of building or developing our market. Since in the early 1990s, domestic investors were relatively scarce, simply because we turned to a central planned economy to a market economy. And not only the problem was that we have relatively few domestic large investors, but also retail investors were not receiving the investment facilities they looked for. So it was very important that they wanted to provide them a safe and yielding investment opportunities, and also wanted to create a kind of competition with banks, which were at that period of time rather lazy and were not really keen to attract the retail investors. However, later on, the government interest for that program waned, and after 2008, when we realized that market is very important and actually is reducing our financing risk because of the reaction of retail investors during yield rises, the government initiated the redevelopment of this market after 2011, and also provided the necessary means to develop that market. And we could say that that development performed quite well. First of all, you could see that there was a very large increase of our retail government program. That was also supported certainly because the population started to increase their saving, and also after a period of time, banks were not so keen to attract that type of savings. But later on, we realized that because private individuals likes 1 year investment, we wanted to tap or persuade them to buy longer-term securities as well. This program started last year, and you could see that we had some success in reaching this. And that was clearly partly the result of our pricing and increasing sales of network of sales, but also I believe that the marketing linked to that. So what are the communication means for wholesale investors? First of all, I believe that the most important, that is the website, akk.hu, which is, of course, not only in Hungarian but also in English, and it is a very important objective of the agency to provide as much information in English as possible. So whenever we may have something in Hungarian, we usually will put it in English in a couple of weeks, in a matter of a week's time. We also have regular publications, partly the financing plan, the annual report, and monthly and quarterly reports, and the annual finance auction calendar as well. And it's very interesting that originally those publications were in printed form, and we send them out to investors and to anyone who were on our mailing list. However, the effectiveness of that list was very poor, and we later changed. So that means that most of our publications are now only in electronic form and also only downloadable from the website as well. So there's no problem with the updating the mailing list and sending documents which are not really interesting. The third, deal-related and non-deal-related roadshows. These are mainly used for international issuances. Basically, we used deal-related roadshows. That means that whenever there was a decision on the basis of the opinion of banks having contact with the debt agency, we organized deal-related roadshows, and that was the place when we met with investors both in Europe and in the USA. What's interesting that recently one-on-one meetings and especially reverse roadshows became much more interesting, and that means that a large number of investors are looking for investing opportunities, and when they came to Central Eastern Europe, they organize or ask to organize a tour in Central Eastern Europe, and they spend a day in every country, and they go to the debt agency, to the ministry, central bank, meet with investors, and they get a whole picture of the country maybe worth investing. And we believe that that's very useful and very, very important. It may be time-consuming for us because that's usually the head of the front office and myself participate in those meetings. But actually, it is not only important of getting new investors or maintaining investors, but also we can also receive information from investors.
How often do you have investors coming to Hungary to see you?
It can change, but normally it is once or twice a week. And it may be that one bank comes with one investor or maybe 7 investors, so it can vary. But I believe that can be very, very effective. And there is also another way of reaching investors, and that is that there are regularly yearly international conferences like what Euromoney organize, and when we go there, that is also an opportunity to meet with banks and the investors. Probably there is one reason why banks are keen to organize these meetings to bring investors to Hungary, and that is that we not only announced after the crisis that we would give international mandate to organize international bonds to primary dealers, but it is also very important that how active they are before these issuances. So that means that our primary dealers are very keen to organize these types of meetings with AKK, and that's good for, I believe, both parties. And that is the website of AKK. You can see that it is very important that right on the main page you can get most of the most relevant information which are important. That is the recent auctions, the planned issuances, secondary market yield evolutions, news, everything else. And if you are interested in more specific items or topics, you could get it through the menus on that website. And it is very important that we update it frequently. So it is a rather flexible system. So my department, the staff in my department can change the structure of menu or the web page if they wish, or if we have new things. So I believe that what is very important that you have to provide as much information to the market as possible, simply because market participants or investors are very keen to get new information and get to know better how your market works. And if you provide a really good working market, and information is part of that, that would provide that you will have those investors buying your securities. Actually, Hungary was in some way very successful because we have the highest share of foreign non-resident investors in our market before the crisis, and actually that was one of the problems during 2008 because we have too much non-resident investors.
Okay, thank you very much. So we are running a little bit behind, but if, Otávio, can you mention just a little bit about Brazil, how you manage this, your stakeholder communication? And then I'll ask you. Okay, thank you.
Sure. Our Investor Relations Office was created in 2001, so 14 years ago. They are within our middle office. So we are 25 in the middle office, 5 directly involved with this kind of functions, responsibilities. They are responsible for, they are the first contact with rating agencies. They help them in preparing their annual agenda. They participate in meetings with government officials. They try to anticipate some issues when go to the press. They call the rating agencies to explain better what is happening before the press start. The press is very fast in trying to contact the rating agencies, so we try to anticipate and then present our view to reduce misunderstandings. They also have contact with investors regularly. They update presentation to talk to investors and participate in the meetings. They try to understand what is happening in the whole government to update our presentations with the news. They have the contact with the press. We do once, unless twice a year, courses to the press, to the journalists that cover the Ministry of Finance, general discussions, or even some specific ones such as issuance on the external debt issuances. So they try to cover this kind of specific noise that they see regularly in the press. And they are also responsible for the quality of the data released by the Treasury regarding debt. I mean, annual borrowing plan, annual debt report. They revise the document to see if the speech is being kept, the official speech. And they are responsible, it's not necessarily a function of the Investor Relations Office, but they are responsible for the Treasury Direct, so that our retail debt program. They're responsible for the speech, for new language, new products. The front of the operations are done by the front and back office, but the discussion about the future of the program is done by them. So they have a very broad
Okay. Okay, great, thank you. And since you mentioned the rating agencies and you started with that, I'm actually going to go first to Lisa. If you could talk to us a little bit about how you, what kind of information you need from the debt offices.
Sure. Thanks. It's a pleasure to be here. Thank you, Liz. When I need the clicker. I have many slides, which I'm not going to touch on them all. And how long would you like me to speak? Let me start there. Fine, okay. Yeah, no, I know, yeah. So that's why I just wanted to check. Oops, and I already messed this up. Okay, let's see, Michael. Perfect, okay. I will, as I'm skipping through a bunch of slides here, the idea is, I think, big picture, communication is key. In terms of all sorts of information. I currently cover Brazil. I covered it for a number of years. We have a rotation policy, had to step away. Now I'm covering it again. Ottavio knows me very well. I reach out to him and his team all the time, okay, and I know I can. And that kind of back and forth is, I think, crucial. When I covered Uruguay years ago, it was the central bank was our main point person. And in some countries today, it's still the central bank. And I think my message is to kind of to whomever, it's a fluid dialogue, access to information, and responsiveness. And as Antonio highlighted, if he's doesn't have the information, he's going to liaise you with the right person. And that's the same thing that Ottavio and his team do. And I think that's kind of a key message in terms of what the agencies are looking for, and I would assume, and investors as well. And I think why to that, as I'm skipping, I'll go back and forth a little bit, is our framework for the ratings. And this is where I will put some, highlight some points on the debt management side, which is key. And that's kind of, as you are debt managers, that's your bailiwick. But, and why we look at not just level of debt, but composition of debt. But I think right here, you see from our framework, debt to GDP doesn't determine the rating. You can have an extremely high level of debt to GDP and have a AAA rating or a very high rating in the investment grade category, and an extremely low level of debt, and I'll go flip back a page. Here are our ratings in LATAM. Ecuador has an extremely low level of debt, but it has sequentially defaulted on that debt. And some of the countries at the second two columns to the right are speculative grade countries, have lower levels of debt than some of the investment grade countries, including Brazil. But the approach that we take, it's multifaceted. It's a qualitative and quantitative. It's not a model. It's a framework. And the criteria encompasses basically 5 key areas. So you have the political, we used to call it political, but now it's called institutional and government effectiveness. So this is kind of the overall checks and balances in the system, predictability of policy making, et cetera. Including here data transparency, availability of information, et cetera. It doesn't mean democracy versus non-democracy, and that's also why we changed the term technically political, from political to more institutional and governance effectiveness. So, Ottavio could be helping me reach out to someone in Congress, okay, that we need to talk to, or ideally help set up the meetings for someone like that. That, when we're meeting, and I'll kind of go back and forth because of the interest of time, we don't just meet with the government, okay, in per se the finance ministry or just the central bank. We're meeting with other ministries, we're meeting with other parties, because it's important to have a broad view. And really, whoever our point person is, and generally it is the debt management office, they're the ones helping set the agenda, and they're involved in all of that with us, okay? And so a fluid back and forth is key, because on this institutional governance effectiveness side, you're talking with a broad set of players. On the economic component, we're looking at, here narrowly, our criteria looks at the growth outlook, per capita level of income, and happy to forward our criteria to you, and the guys and women in the debt management office, know that, and that's why kind of the criteria is where I'm starting, because this is kind of all the pieces that we need. But okay, what's behind the growth outlook, and what are evolving trends, et cetera? And that could be a conversation with Fazenda, with the finance ministry, but clearly the central bank is keenly involved. And I did notice on the IIF thing you had for Brazil, kind of was equally in there with the central bank as well as Fazenda, and that's certainly the relationship we have with Brazil. Kind of, I think it's again, multifaceted, and that could vary from country to country. But all components of the economic outlook are key, and so, websites are great, and obviously, you don't need to worry about data availability, for example, for Brazil, but dialogue around it with policymakers is crucial, and that's where the debt management offices come in to facilitate. On the external side, we're looking at balance of payments, external debt for both public and private sector. And here it's often the central bank that will dialogue more with this component. And data coverage issues, and these are kind of information needs that we talk through. For small countries, maybe you don't have an international investment position. We try and build that for every country, economy. And so this is kind of, a back and forth area that we work with. On the fiscal side, and I'll skip over that because that's where I have a few more slides on that. A lot of components in there. On the monetary policy side, we're looking at obviously exchange rate regime, predictability, the monetary policy framework overall, are you meeting targets, what's your setup, all of that. And obviously here you're generally talking more with the central bank. But all of these components feed into determining what the rating is, and information flow on all of these parts is crucial. I'll skip over this. This kind of feeds into the nuts and bolts of how we get to the rating. I think is more importantly the qualitative aspects. On the fiscal side, again, it's not just debt to GDP, and that's also all the work that you and your offices do are key. And I think the example that Antonio highlighted, Uruguay, from our definition, defaulted back in the early 2000s. It lost its investment grade status, but it regained that. And one of the components is kind of the way it changed, debt management evolved in terms of currency composition, et cetera, kind of the the maturing over time, not the debt reprofiling exercise per se, but the improvement in the composition of the debt, et cetera. But also, I think this here kind of I'm going back and forth a little bit, but the dialoguing through really at that point, because it evolved from the central bank to the finance ministry's office, what was happening in the economy? What are the reduced vulnerabilities in the economy? Some shifting away from a reliance on Argentina. So we really had many dialogues set up by the Treasury in terms of the broadening the basis of growth, so to speak, in Uruguay into kind of be it the pulp and paper plants and the free zone, et cetera. So again, much beyond the realm of just the kind of bonds you're issuing in the market. And I think that's an important point to highlight. But all of that said, going back to debt somewhat, the dialogue with you in terms of the tenor, the markets that you're placing your debt in, the currency composition, all of this, all of this feeds into how we look at your kind of fiscal score. And on the fiscal side, we're looking at the flows, so the size of the deficits, or our focus is more change in government debt, because if you have some below-the-line issues, off-budget dynamics coming in, we're looking at that. But in terms of debt to GDP and the interest burden, you can actually improve your score or worsen your score for some of these more qualitative points where you can get a worse assessment, and it depends how much of a worse assessment from your starting point of a debt to GDP ratio and an interest burden, depending on if you have significant exposure, for example, to exchange rate movements. As noted here, kind of if your debt is, if you have more than 40% of debt denominated in a foreign currency, if non-residents hold a significant portion of your debt, and then we look at the debt service amortization profile, how variable it is, and if a lot of your debt is held by the banking system, that means that the sort of, on the margin, in a crunch situation, it may be harder for them to take on some of your debt. So kind of to different degrees, if you have demerits in some of these areas, technically speaking, if you get 2 demerits, and I don't necessarily like that word demerit, but if you get 2, if you hit 2 of these, then kind of your initial starting point that I highlighted in terms of debt to GDP and your interest burden can be worse. So that's where kind of the debt composition is very important. And in LATAM, you've seen significant improvements in that. And so this is just to show you kind of debt to GDP kind of fell from the early 2000s, but in more or less it's held pretty stable. But I would say you still have, this is a broad brush, ratings improvements because composition has improved very much over the last, decade. And then, local market deepening, and many of your sessions will be touching on that, I see on the agenda, be it tomorrow, what have you. And that's one of the things that we obviously, one of the things we focus on, and kind of, the debt management office, is a key role in that. Obviously, you have to have the strengthened policy framework overall in place, but then active debt management plays a key role. And that is a key reason why I would say, besides you have a backdrop of the QE, et cetera, but you had this important rise in the share of non-resident holdings in local markets over the past 5 years. It started in the, kind of when LATAM started strengthening its overall fundamentals, but then it did certainly accelerate it under QE. But the caution I would put is exactly what Andres highlighted. There are downsides to that too, right? Where we consider, for example, non-resident holdings of local issue government debt external debt. Okay, and there's so we make a distinction there because there's a sense would this investor, does the non-resident investor have a little more of a predisposition to maybe pull out in a moment of crisis? We look at it from a balance of payment perspective, so throw it into our external debt statistics. That's something I just did want to highlight because there is a fine line there if you may have too much, and that's where it goes back to kind of this notion that non-resident holdings can add some more vulnerability, at least from our point of view at this point in time. And that's, again, I have the chart here for LATAM, but that's clearly a global phenomenon in terms of non-resident penetration in local markets. So to finish up, highlighting the communication, actually this is a key point, and it goes back to the communication, contingent liabilities. We're not just, in addition, we're looking at what off balance sheet can move on balance sheet. And this is where we absolutely need dialogue with debt management offices who are looking at and covering the state-owned enterprises. And Antonio, you had a point on one of your slides on that the debt office is evaluating the needs from the state-owned enterprises in terms of their funding. And I reach out and I'm talking with Otavio and no other point person in many times in Mexico, in the finance ministry, kind of getting a sense, what is the attitude of the government towards managing its, we call them government-related entities, this kind of support that's likely to be expected in a moment of crisis. Because our criteria is looking at general government debt, so debt of the central government, state and local governments, be it central bank, but state-owned enterprises, for example, are not formally in there. But if that migrates on, and under what circumstances, that's a key component that we look at. And so a dialogue on the state-owned enterprises, for example, is key from us because that could, is another component. Again, frequent dialogue. It'll often go through the debt management office. They're the point person, but again, they can be they'll coordinate our meetings. We'll visit in person at least once a year on site. But as Andres highlighted, on meetings at the IMF meetings, different forums. That's key. And when you're coming through New York or one of our key offices, London, what have you, in Singapore on a non-deal roadshow or a deal roadshow, you meet with the team because you have a primary analyst for credit, but sometimes you want to meet with the broader committee, right? And that's where there's a lot of value. So we're always, anytime, our doors are open. I think that's really key. And it's to talk about all of the issues, not just what debt you're issuing. But to the point of the phone calls that you guys have talked about with the team, to the point that, especially with the local government issuance, when you're issuing in the local market, that may not be picked up as easily by us, for example. It's easier when you see a bond going in the global market. But you're sending us the information on when you issue is key, so we can rate it. And that's increasingly picked up for the local market dynamics. And we have a certain program in place called a new issuance desk program that it could be more of an automatic feed, because you want to get your rating out there as fast as possible. And so if someone in the debt management office is linked up to automatically send that documentation to our new issuance desk, it's a seamless process versus kind of finding the primary analyst to then kind of walk through the paperwork. It's kind of just the mechanics of it. And that's an increasingly important thing. We'll get calls from investors, why isn't this rated? I see it on Bloomberg, but I can't find it on your website. And we don't go to Bloomberg, right? We have to go to you. You have to send us the information. We can't rate off of a Bloomberg screen. That's not that's our protocol. Just thinking here, again, I think I've touched on many of the points, but the dialogue and open lines of communication, I think, are key. Not just reliance on, kind of going to the website. We're sending emails, setting up phone calls, and it's not just in person, what have you. And again, the debt management component is key, but really, often your office is the touch point to the rest of the government.
Thank you so much. Can you go back to the slide that showed the different countries and the debt? This one. Right,
that one,
yeah.
And that's I don't know if I put it. Yeah, it's Credit Suisse piece. Yeah.
Okay, non-resident holdings, percentage of total outstanding. Okay, can we just hear really quickly from Turkey, and then I know we're running late, and we're closer to the lunch than the others are, so we can take a couple minutes of the break. So, please.
Yep. Well, in terms of investor relations, our practice is very much similar to the ones in Brazil and Uruguay, Hungary. We have a separate dedicated unit. They are responsible for investor relations, and we have a website that we provide information on macroeconomic developments and prospects, as well as debt management statistics and projections. Also, it's important for us to reach investors in a timely manner. That's why we send newsletters by email. Also, face-to-face communications is very important. That's why we have meetings regularly, ad hoc meetings as well, and conference calls often, because just giving out information and statistics is a part of the transparency, but it's not it's not that easy, because you need to explain sometimes investors the certain ratios or certain policies, the rationale behind the certain policies. For instance, during the last 5 years, our non-resident ratio is also increasing, and investors have a little bit concerns about rising rate of non-resident share in domestic debt, and we've received questions. And what we did is we developed index for non-resident share stress index. And we shared this index with the rating agencies and other investors. And what we did is we put different informations together in that index, like observation capacity of domestic banks and the composition of that as well. So in that way, we managed to explain what this means, what this ratio means in fact. So besides those regular channels, we also use social networks like Facebook and Twitter accounts that we have. It's also a fancy way of sharing information, maybe. And we publish debt management reports as well, and not only the statistics but also analysis that we share. It's a very, very comprehensive reports in terms of annual and monthly reports that we have. We also publish those reports on the website. I think that's these are the main items that I'd like to share with you.
Okay, great. Thank you so much.
Thank you.
Now I will pass on to Elizabeth, who's going to talk about the results of a survey, right, that the World Bank did,
Well,
or a
it's,
report.
Sort of, but it's also to give a kind of a broader picture of what various countries are actually doing. This is a forthcoming report. Hold on, it's sort of falling out there. Okay. It's a forthcoming paper, and I'm very happy that my co-authors are here. Otávio from Brazil, from Tesouro de Brazil, and Rodrigo Cabral, who's one of the colleagues and who also worked in Tesouro of Brazil. So we're doing a paper to focus on these two aspects, transparency within a global sort of accountability, and also management of stakeholder relations for that dialogue that we hear is so important. And we're looking at it from sort of a broader perspective. It's not just investor relations, but it's all these other stakeholders that are being mentioned. How you can pull it together, how to be very efficient in doing so. We did in-depth interviews of up to now 9 countries: New Zealand, France, Denmark, and then South Africa, Brazil, Chile, Colombia, Turkey, and Poland. And I think we're going to get other candidates today. But we also reviewed the literature and I very much recommend a paper of the OECD, working paper of 2013 on investor relations, and they surveyed 26 countries, and it was very good. We tried to go also more into the qualitative aspects. Then there's the IIF. For you, I'm sure you all know it, but if you don't, it's certainly worthwhile looking at it. So, very quickly, some concepts. This is the idea that we heard from our 2 panelists from the country, is that you, the Debt Management Office, down below, principal debt management entity, will be reporting to Congress, to obviously to the ministers, sometimes a cabinet of ministers, the central bank, you'll be coordinating with them, the auditors. It's a flow of information which reflects the delegation, the accountability. So within this whole idea of transparency and accountability, it's absolutely key. But then you also have these other elements of transparency that we've heard throughout of the market. Let's say when you were creating the market in Hungary, you mentioned that it was just absolutely essential to put it out there. You know, these are the information. So you have all the investors, international, domestic, retail, you know, it's different information needs. Primary dealers, of course, the regulators, the rating agencies, specialized press, media, multilaterals, bilaterals. And the idea is that with all this, ideally, you would give the senior policymakers, senior staff, the information for making decisions, for deciding on the debt management strategy, the annual borrowing plan, for monitoring whether it is being implemented or not. And to promote good governance and accountability, i.e., is there compliance? Is there legal, regulatory compliance? Is there contractual compliance, let's say with the World Bank reporting standards? Is there compliance in terms of the international reporting standards and statistics of the IMF? Also, debt managers are responsible for maintaining and even building up domestic debt markets. So there's all these transparency rules that will help to promote a level playing field. And then all the part of managing your investors, right? Of providing good information, of avoiding asymmetric information, and so on. And also to avoid misinformation with the rating agencies, that possibility, which could impact the score. So it's almost anticipating how they may interpret, so on. And the IIF says, look, it's a matter of building trust and creating a long-term relationship. And definitely that should help when things go downhill. And from what we heard of Mario's presentation today, it may be complicated. The market can get complicated. After a few years of the good times, inevitably there may be a cycle, and so it's important to build up this relationship. And kind of, you always said, that person will be there. I know that when I call them, they'll be there and they'll be able to give me that information. This you probably already know, and in the interest of time, I won't mention, but this is what the IIF consider are the key aspects for investors, and this comes from their own survey and their contact with investors. This is what they ask for. It has the greatest weight, let's say, of the 20 criteria. And also of the data dissemination practices and the criteria for that. These are the ones also that have the highest score. And as you can see, basically, it's transparency, putting the information out there, having forward-looking information, having the amortization profiles, bringing out debt in a timely fashion, having time series data, allowing them to analyze. You can't see anything, but it's just for you to know that that does exist, the scoring table does exist. So in sum, if you look at the accountability requirements and stakeholders, and then the market transparency stakeholders, you have an awful lot of information to get out there and relationships to manage. Okay, you'll be with the central bank, you'll be with the Ministry of Finance, other Ministry of Finance units, but it really does require significant planning and a strategy. If you look at sort of the sound practice literature, the guidelines, the revised guidelines for debt management, I don't know if you know the DEMPA toolkit, Debt Management Performance, there's some kind of minimum transparency requirements, which I'll leave for you to read, but from the legal and sort of the inside government requirements all the way over to the international markets. So as we've seen, it's not only putting the information out there, it's how you establish active dialogue. Are there good coordination, communication mechanisms? Can you call someone in Brazil on a Monday at 5 p.m. and you know that Otavio will answer and give you the information?
I know he will.
And he will, okay. The same with other stakeholders. You need to hear. I think you mentioned, András, I think it was you, that it's not only to put out information, but to get the information from your investors, right? And that will help you in designing your strategy, your annual funding plan. What do the investors need? And I think it was France today, right, who mentioned that aspect. We have to hear what the investors want. So it's a two-way influence. It's based on mutual feedback. You also mentioned that the investors wanted more transparency, so you have to put out the auction calendar. It's very much a two-way conversation. Sometimes countries that do a lot of their auctions through the central bank lose out because then they don't have that direct contact, which is so important. So I think one of the questions that we would like to address in this study that's coming, and I think we've touched on it today, is, okay, data dissemination has some costs, to publish, to get the website out, but it's even more costly to reach out to the investors, to the rating agencies, to make the road shows. It's interesting that now you're thinking of doing virtual road shows, long distance. I mean, I think that's important. When the DMOs actually do this type of dialogue and encounters, that's what they consider to be the most important. We'll see that in the next section of what are the most important channels. But ultimately, it may also depend on how difficult it is for your government to place debt. If it's a country that has many difficulties in getting out the information and getting your bonds placed, then it may not be costly. Everything's relative. While a country that has long established reputation and it's very easy to get out your bonds, then maybe you don't want to incur those costs. Then it is relatively costly to do these non-deal roadshows. It really depends on what your strategy is. So some DMO practices, these activities of transparency and stakeholder relations management activities, if they're market-related, they're often created when there's a crisis, when your strategy requires you to diversify your investors. I think we heard from France that it was costly to reach the external investors. And who else was saying that they were trying to build, Peru, that on the contrary, they were trying to build up their domestic investors. So that really will determine whether you start reaching out more to those particular investors that you're targeting as part of a strategy. Certainly, if your funding needs are going up, then there will be probably a need to do more outreach. Certainly if you don't have a market and you start creating a market, as the case of Hungary, certainly there must be the need for outreach. And various of the debt management offices that we interviewed sort of focus on the fact that it was after the 2008 crisis that they started doing more. I mean, even countries like Denmark, which you think they wouldn't really need to be incredibly proactive in putting their bonds out, even they said, no, we had to start traveling, we had to start doing roadshows, and so on and so forth. And this was a similar finding of the OECD paper, the survey they did of 26 countries. Most DMOs that we interviewed, and this was also the case of the emerging market countries, of the IIF and of the OECD countries, don't have a dedicated specialized unit. But that doesn't mean that between all of them, the front, middle, back office, and senior players, that they don't cover the same activities. In the end, somebody has to cover it. So, they really do distribute all these other responsibilities. A few of them hired an expert, a media person, investor relations person. Some hired external advisors. You mentioned IIF, right? It came in as a consultant. The primary dealer's feedback is important for setting this up. And then, like we mentioned, throughout, other departments of the Ministry of Finance and the Central Bank will be providing quite a bit of the information as well. So you don't need a unit to have very effective communication and outreach. The means that are being used are similar. We talked about some of them. I'll just go through here briefly.
One of them that I see there is training for media.
Yeah, I think
What is that? Yeah.
Well, I think that's something that Brazil does, and I know maybe a couple of other countries do, but you mentioned it briefly. Do you want to say?
Basically, we have two kinds of courses to the media, twice a year, because they change a lot. The rotation is impressive among the journalists that cover Ministry of Finance, usually the ones, but we call some people that work at the Central Bank also. And then we do a general course covering macroeconomic issues, and then debt management, debt operations, everything related to debt management, and also macroeconomic issues that can somehow affect debt management. And when you see some particular interests, we try to cover them. For example, they do not understand our external issues, all the minimum details of an external issue. So we do a specific course, 1 hour course on that specific, or our reports. So we bring 3-4 of our main reports and then present to them to make it easier for them to understand and to find good news with some information that they usually do not observe in detail. So we try to bring this kind of issue.
I think it's incredibly important as well, because in the end they will be putting all the technical language into a very common working man's, woman's language. So it's important that they don't have, again, misconceptions, that they don't report things. So these are the website, of course, would have all that information that we've been talking about, the debt management strategy, annual borrowing plan, annual debt management report, and so on. But the training for the media, the conference calls, mailbox answers and queries are key. The reverse roadshows, which you mentioned for Hungary, that is becoming even more important, and that they actually come to sort of do a tour of Eastern Europe. Uruguay also mentioned the survey, that you carry out a survey to see also your information, what they think about your...
Yes, in our case, we started with a local survey, but we are planning to do external survey. But the first step was to ask to basically our main clients, the pension funds, are you okay with the information, and what kind of security we like to get in your portfolio, and it was very productive, with the condition that was anonymous. We agreed that we didn't publish the result of the survey.
And then the investors explained to you then that they wanted the action calendar for the next 6 months, which is absolutely key. I think just for that it was probably worthwhile doing. Okay, so these are the various instruments. The most useful market-driven activities do involve an actual meeting with people and getting feedback. This is the OECD survey. The number one mechanism, shall we say, or activity that they thought was the most useful was meeting with primary dealers and getting feedback from them. And the second was the road shows with one-on-ones, although it was relatively costly. Then came all the publication, the putting information out there on your website, monthly bulletins, the investor presentations, and so on. Then meeting with the investors and potential investors, and then attendance at conferences and roundtables. So this is kind of an average OECD take on what was the most useful. One of the more difficult problems, I think, is that more than half of these OECD countries that were surveyed did not have specific objectives or targets. So as in any activity, if you don't know exactly sort of what you're aiming for, it's difficult to measure if you reached it or not. And the most common criteria that these countries used were qualitative. In other words, did I get good feedback from the dealers? Did I get good customer feedback? Some of them mentioned, but sort of way down below, media coverage, commentary, website traffic, the number of hits, auction performance, and achievement of defined targets. I think, as Andras was saying, it's very difficult to separate some of the outcomes and the influence that you might have had on that from all the other macroeconomic and other aspects, no, that might affect the placement of your bonds. I think Uruguay mentioned the hits, the number of hits on the website. You had that map and where they were coming from. So, I mean, it is useful probably to also explain to your management what it is that you're doing, that you had so many investor meetings. I think you mentioned you had one meeting a week, no, at least, with investors. People coming. Never mind the ones where you go out to. I mean, so that's very interesting. And finally, the challenges identified, I mean, they tend to be interconnected, and they have to do also with the fact that it's very difficult to measure the impact. So if you can't measure the impact, it's difficult to sell to your policymakers that this is a really important element, though we've heard from everybody it is, right? But sometimes it's difficult to convince policymakers. So then you don't get enough budget, you don't get enough people. If you're trying to continually update the information, you need staff. Sometimes it's very difficult to do all this. And as I mentioned, convincing senior staff of the importance of this function. And then finally, to wrap up, what we have found so far, and what the literature shows and a sound practice advises, is that there be a very active transparency and investor relation management function. At a very minimum, transparency, because you have to report to your Congress, you have to report to auditors, et cetera, but also with a more active stakeholder dialogue, which can be more expensive, but it's apparently incredibly useful. The latter, in other words, the investor relations outreach, can be flexible, right? If the market really requires, or if your funding needs requires you to place more, then you could probably intensify. But again, you need support from your policymakers for that, no? If it's going to be, let's say, accentuated during a certain difficult circumstance, you probably need more budget and more people. You don't necessarily need a dedicated unit, even if you do, which is probably, it's probably a good idea if you can afford it. Many small countries cannot. If you can, that's great. But if not, then there's this whole collaboration. Communication is from the whole GMO, and in fact, from the Central Bank Minister of Finance, it's from the whole government, really. One thing which we haven't mentioned, but I think is absolutely key, is at the back office. And speaking of systems, if you don't have excellent information, then it's very difficult to communicate and to get it out in a timely fashion. So you should never undervalue your back office and your management information system. And finally, good communication has so many benefits that even if it does have a cost, it's probably much smaller cost than it is in terms of getting a lower rating if you didn't communicate things in time, or having uncertainty and risk premia placed on your bonds. So it really is an absolutely essential part of public debt management, which may not get enough attention. Thank you.
Okay, great. Thank you so much. So we are running late. Most of us will be at the lunch, but Lisa will not. So if anybody has questions for Lisa, you can ask them now. Please? Can you just say who you are and where you're from? Can you maybe use the microphone that's over there so we can hear you?
From your opinion, how should emerging issuers improve the investor base for specific products like project finance solutions with sovereign collaterals, for example? Because we've been working a lot in trying to, with the international markets, in trying to improve the base of investors, and we find difficult sometimes to explain not only the products but also the collaterals, the role of the public sector. So what can you say about the way of improving this strategy in order to enhance investment for utilities, energy, and other strategic sectors?
Yeah, I think to the degree what the sovereign can do is again predictability, having the deeper capital markets, this kind of set rules of the game. I think that would be the key starting point in terms of kind of for LATAM. This is a challenge, trying to really kind of get the kind of the local pension funds, et cetera, to continue. I'm just thinking of Mexico, right, which has a deep pension the market for pension funds, and constantly trying to innovate and trying to improve the attractiveness of kind of regulatory framework for getting into kind of infrastructure-related investments. I think the starting point from what the debt management office can do is really continue to move out the yield curve and have the transparency and predictability in terms of issuance there, and clearly. What helps that is a sound macro picture, right? That's going to then to facilitate, because the debt manager can only do so much if you don't have the overall economic story in place, right? That's where, and that comes to the rating too. The debt composition is obviously something we look at, but there are many other components that go into that rating, as I highlighted, and so I think it's improving kind of the overall picture, as well as some of the micro foundations in the market, which are not to be honest, kind of my technical bailiwick. But I think it's a combination of factors. But starting with what the management office could do is kind of really predictability and strengthening the profile of the government debt, and obviously a lower government debt burden, so you can improve, crowding in for private sector investment too.
Any other questions? Please, and can you also say your name and where you're from?
Yeah, my name is Amit Roy. I am a director in the Capital Market Division in the Ministry of Finance in India. I have the experience of dealing with the credit rating agencies all the time, because I am dealing with this subject. And from my experience, I can tell you that all of you are giving a lot of emphasis on this dialogue process. But my experience is that this dialogue process, more often than not, is unidirectional. That means the rating agencies say that we have got these parameters, we have got our methodology, we want the information, and you keep us giving on the information in the way we want. The thing is that there can be an other way also. The rating agencies also need to hear what the member countries think about their own agencies. About the S&P, I will specifically say that disproportionate emphasis are being laid on the qualitative aspects rather than the quantitative aspects. For example, what is this predictability of policy all about? We are all in the financial market. Can we predict what the market will behave tomorrow? Who can say that there will not be a financial panic tomorrow? And if that happens, all your policies, all your predictions will go down the drain. So from our perspective, and I'm sure I am talking on behalf of many of the emerging and the developing countries, that this too much emphasis on this certainty, predictability of the policies should be done away with. And broadly, this too much of emphasis on these qualitative aspects is bad economics, because it gives you the discretion of analyzing in the way you like. So what I would prefer is that most of the agencies should concentrate on trying to alter their methodology and enter into a dialogue with the member countries also. For example, as far as the S&P is concerned, you just check from 1990 till date what is the position on the rating you are giving to India. It is more or less the same. Do you really feel India in the 1990 and India in the 2014 is the same? So what does it speak about the methodology which you follow? And the rest of the aspects, that the information flow should be very lucid, it should be seamless. That is well taken care of, and that is well appreciated, and we are trying to do this also. And investors keep coming to us all the time. We are constantly engaging with the credit rating agencies. There are 6 major agencies which rate India on the basis of the consultation with the government of India. But our main point is that there is a perspective from the member countries also which are not being heard. Right now the dialogue process is unidirectional. You just give us the information, and when the rating time comes, you give us 1 hour to react. You send the draft to us and you say that as a courtesy I am giving you 1 hour, you get back to us, which is not possible. We have to contact all the departments. We have to show it to each and every officer who has contributed in the discussion process, and it takes minimum 24 hours time. Why do you give 1 hour time to react? So from the practical perspective, what I feel is that the dialogue process should be more and more a bilateral process rather than the unidirectional way in which it is carried on right now.
Okay, thank you. A lot of things,
Yeah.
Lisa. Can you
And
answer them
sure.
just briefly, and then I think we really have to break.
Absolutely. And I think one, in terms of our criteria, is our criteria. We put requests for comment out there. So, for example, right now, we have a request for comment out that we put in the market middle of last week for how we rate GREs. It's our job to, or the person who's covering them, to kind of make sure that you, for example, get that information to give us feedback, okay? We've done that for the sovereign methodology too, which doesn't have an RFC because we're not in the middle of moment of changing it. But we do adjust our criteria because we learn through crises. It's still the case, you may not like it, but I think one of the key things is, it's important for us that what is the criteria. And I would say it's not there is a qualitative component of it for sure. One, we're making forward-looking forecasts by definition, so that's an opinion there where we think things will go. But when I talk about predictability, that component on what political/transparency predictability of policy making. Example, India, you have an established democracy with transfer of power, and there's a pretty consistent policy framework over time. That gives you I would say that's going to be a comparative strength in India's rating relative to a much lower rated credit. Let's put Venezuela on the table, where there is not, you don't have the same degree of transparency, predictability of policy. So there's an important difference there. I mean, and there's a gradation here according to the way we look at each component from a score of 1 to 6. That assessment, while it is qualitative at the end of the day, it comes from also looking at some quantitative components, be it pieces by the World Bank or IIF or what have you, and then obviously conversations with many stakeholders in the public and the private sector. In terms of just thinking, India's rating, yes, I think India's rating hasn't been higher than where it currently is at BBB-, but it's lost investment grade. It was investment grade, had lost it, and has come back. So there has been a lot of movement there. And I would say the same thing, for example, with Uruguay, where today the rating is actually where it was a number of years ago, but there's been movement in between. And I think that is I think that's a point that I would highlight, where India is one of the countries that has lost investment grade and been near to losing it, and that kind of has rebounded. what else would I highlight? I think, the 1 hour component, it is case. It is given the regulatory framework that we're dealing with globally, there are somewhat different rules, but our practice is when we make a rating decision, we notify you that the decision has been made, and you have a 1 to 2 hour window. My colleagues in Europe have a longer window because of regulations there to comment. But I would actually disagree very much that it's just 1 hour, in the sense that when we have management meetings, we're meeting with you for a series of days. Okay, so, and there is where there should be a dialogue back and forth on the policy issues, where we are gleaning from you, information across the spectrum for the rating, what forms the rating, and throughout the year. Because while there may be an in-person visit, there's the dialogue that we have is throughout the course of the year. And so, yes, that window is 1 hour to look at a press release, and with, and given the scrutiny kind of that we are under, that's the way our policy has gone, that there is that limit, to be honest. But I would say the dialogue is much more than that 1 hour, and I think that's the important component that I would focus on.
Okay, thank you so much. You've all been very patient. I just want to thank the panelists also for the discussion. And we're now late for lunch, so I think you'll be escorted to the lunch, which is on one floor down. Thank you.
And I'm certainly happy to take any other questions too certainly feel free to contact me at any time, because that again, that's very important to hear feedback, for example.
Thank you.
Sure.